Good morning and welcome to the Brazilian American Chamber of Commerce's 7th installment in the webinar series called Surviving COVID-19, Tax Function Facing Up to the Challenges. We're doing this in conjunction with our member and partner, PwC. I am John Welch, the Executive Director of the Brazilian American Chamber. First and foremost, we wish you and your families health and safety in this difficult time. Thank you all for joining us, and a special thanks to PwC for hosting this event. Just a quick aside, I'm an economist. My father was the head of the tax department of a rather large accounting concern in Brazil. Neither of them are with us anymore. But people always ask me, why did you become an economist? And I said, my answer is very simple. I didn't have enough personality to be an accountant. So anyway. Without further ado, I will turn the screen over to our moderator, Ana Malviesto, PwC's Brazil's business network leader. She will moderate the panel. She is joined by the tax reporting and strategy and consulting partners. Ana, thank you very much.
Thank you. Good morning, everyone. I hope you and your family are safe and doing well. Thank you, John, for the introduction and also for the partnership. I'd like to acknowledge the importance of the Brazilian American Chamber, especially during this pandemic period, bringing and keeping your members updated about important topics. I'm here today to moderate an event I think will be valuable for the companies. Our event aims to bring practical information related how to operate the tax function during these new normal days. I'm going to moderate this event in a different way. I'm going to pretend I am a CFO and I have PwC consultants to bring me advices. I'm going to ask questions and I can get the most business advice from them. I have the privilege today to share this event with my Brazilian PwC partners, Manuel Marinho, Tax Reporting and Strategy Leader, Romero Tavares, International Tax and Transfer Price Leader, Bruno Almeida, Labor and Social Security Manager. I encourage you to ask questions during this presentation. There is a specific place in this platform, and I'm planning to leave 15 minutes in the end of this event to answer those questions. Please include your name and also your company's name. If we don't have enough time, I'm going to make sure you are going to receive your answer in your email. I'd like to share one more piece of information before we begin. Our fantastic team have put together some slides about the tax function and how to deal with these challenges during COVID-19 period. And I'm going to share this in the end of this event. Okay, with that, I'm going to begin. As a CFO, I'm watching my revenue dropping dramatically since March due to the social isolation put in place because of the pandemic. This situation has become a recessive cycle that started with health problem and now turned into an economic problem. I would like to start asking Romero. Romero, can you please give us an overview about measures taken by the Brazilian government to face those challenges? And could you please also compare those measures with the ones issued by US and OECD countries? Please, Romero.
Thank you, Ana. Good morning, John, and good morning, everyone who's in attendance. Again, I second Ana's and John's comments. Hope everyone is watching this safely and healthy at home. To answer this question, first, let me take a step back and remind everyone this is Brazil. So basically, the first thing the government had to do was to address what in Brazil is historically one of the main issues in employment area, which is the very large payroll tax burden we have and the very inflexible regulations and laws pertaining to employment contracts. So what the government did, first and foremost, and my colleague Bruno will cover that in more detail in a few minutes, but what the government did was first to make sure that there were more flexible rules in place for a reduction of working hours, for suspension of contracts, for special emergency assistance to be provided both by the government and by firms to employees who go under a furlough type arrangement, which was very much needed. It was very important, again, because this is one of the most difficult issues that businesses face in Brazil, in how rigid the rules are in terms of employment contracts, almost like if you think of French, almost like in a French employment law universe, something between the French and the Italians. It's not easy. If I think about some of the other measures that we're taking to begin with, they were horizontal in a way because they basically were granted not only to companies who were impacted by the crisis directly, but companies that were more vulnerable. So small and medium businesses that have a special tax regime that already benefits them with a simplified mechanism to comply with tax obligations and with a slightly reduced burden in most cases. Those businesses had their filing obligations and their principal tax obligations deferred for 3 months. That afterwards was complemented by states and cities. Brazil is a federative state, so we have this complicated system of federal, state, and local taxes, which are basically transactional type taxes. So as you all know who have been having any experience with Brazil, it's quite complicated to manage. But again, at least for those more vulnerable companies, this is what was done initially. Later on, this was expanded to some of our critical turnover taxes, PIS and COFINS. This is one of the biggest revenue earners for the Brazilian government. There was also an extension of payment obligations, a deferral for 3 months with respect to those taxes. And before I analyze whether this was good or bad enough or not, I think it's worthwhile to draw a quick comparison with what was done elsewhere. I guess there's nothing comparable with what the U.S. has done so far. So, the mere budget that was devoted to fight the pandemic of $2.2 trillion is something that only in America we can see at least at this moment. I think Germany has committed to something very large for Europe as well. But the point is that it still doesn't compare to the $2.2 trillion dedicated by the U.S. And the measures in the U.S. were not only measures of immediate relief, but there were measures of stimulus as well. So the CARES Act and everything that goes with it, the carryback of losses, more flexibility in interest deductibility rules, the deferrals, the Corona voucher type payments to those in need, everything that the U.S. has done so far is unmatched. But if I look at elsewhere within the OECD world, most of the measures are conditioned to specific impacts having been suffered by the taxpayers. In some countries like Germany or Japan, for example, you have to approach the authorities and request for a deferral. The deferral can be up to December, can be up to 1 year. For some other countries like Italy, for example, there are specific percentages. If your revenue went down by 1/3 or by 50%, you have different forms of relief and deferral. So Brazil, in a way, is more generous than a lot of the other countries, given that the measures are more horizontal. On the other hand, it's not, because it doesn't tackle all of the different taxes that it needs to tackle, and comment that a little bit further later on. But at least in this critical area of employment taxes, the relief is very relevant.
Thank you, Romero. I was on mute. Reason why I take a while. So for the ones that just start watching this event, I told before I'm pretending I am CFO and I'm making questions to my PwC consultants. And Romero just gave us an overview what's going on in general in Brazil. And he mentioned about labor measures. And we know one of the biggest challenges deriving from COVID-19 crisis is how to maintain the employment. We all know that in the end, what matters is people, and we will need them to the recovery. Considering this, I'd like to ask Bruno. Bruno, please, how can I keep the employment in my company?
Hi, Anna, and good morning, everyone. So it's a pretty excellent question, this. Just before answering, I really do hope all of you are well and safe, okay? Unprecedented time is really difficult, but we are facing this together. So back to the question, as Romero already mentioned, due to the health crisis brought by the spread of the COVID-19, Brazilian government has recently released several regulations with the alternatives that may be adopted by you in order to preserve the employment as well as to a potential trial to minimize the economic impact, okay? So considering that there are many regulations, lengthy text, full of details, some of them a bit complex to be true, I'll just give you an overview, okay, highlighting the most relevant points of those regulations. When it comes to the labor and social security provisional measures released, we have, I think, on the top, the most important one, the one that creates the emergency employment and income maintenance program. It basically defines three rules. The first one, which is not a direct impact for employers, but it provides an emergency job preservation benefit to be paid by the government, and the amounts are based on an employment insurance, okay? So this will help employees to go through the situation. But the two new rules that it's important for us to talk here is the first one. There is a proportional reduction. There's a possibility for companies and employers to proceed with a proportional reduction of employees' salary, okay, as long as they also reduce the working hours. So it could be 25%, 50%, or even 75%. So basically, during this coronavirus pandemic, employers may set individual agreements with their employees and establish days reduction of working hours and salary, which can last up to 90 days, okay, formally in the agreement. And everything will be back to normal. So in other words, we will reestablish the situation previously to this reduction when, one, this public state of calamity ends, which we don't know when. Two, when we have these end of the individual agreement date, when we reach out to this date set on the individual agreement, or when employers, by their free will, communicate employees of the anticipation of the date previously defined in the agreement, okay? And the second point, maybe it's even more important than the reduction, could represent more a better mitigation of the risk, depending on your planning, is the temporary suspension of the employment contract. So what happened is now employers have the possibility to agree of suspending the employment contract for a certain period of time, which can be up to 60 days, or maybe divide that in 2 periods of 30 days. So during this period, employees will keep their benefits. There might be a few exceptions, okay, like transportation voucher, but companies will, as a general rule, not have to pay their salaries. Only depending on certain circumstances of their gross revenue, they may have to pay a monthly compensatory aid that's equivalent to 30% of employees' salary. So these two alternatives, so the reduction of salaries or suspension, they, as said before, they can be implemented through an individual written agreement between employer and employee, but in some cases they may require a labor union to be notified or through a collective bargaining agreement. Okay. Another provisional measure we have here, it refers to the change on the rates for the social security contribution that is destined to autonomous social services, the third parties or other entities. So there was a reduction on those amounts to be paid, which also helps companies. And last but not least, we have the first provisional measure that was released by government, which talks about the anticipation of vacations, defining criteria for telecommuting. It discloses rules on the balance of working hours and also allows the possibility of the Fgts payment. I'll just go really through just to give you a background, because maybe it could be interesting for you as a company to implement one of them. The first thing on telecommuting is basically setting rules on how employees can work from home without the need for individual agreements, with less bureaucracy, and which is also positive because it can help companies to reflect on the current situation and understand in the future that the physical space they have now is not really necessary. They can even sell some of their spaces, and that employees, they can set, depending on their duties, they can perform their duties with the same efficiency, even if they are working from home. When we come with vacations, now there is the possibility of anticipating these vacations, even if the employee has not completed his vesting period for it. And I think the best point in here in vacations is that now employers can choose during a period from the grant of vacations to pay the bonus, the 1/3 bonus from vacation, from the grant until the Christmas bonus. So it's like a possibility of postponing this mandatory obligation, okay, when it has more cash to do it, when the situation is back to normal. And that's also another possibility is that there is less bureaucracy on group vacations too. When we focus on holidays in this specific provisional measure, holidays and bank off hours, what we have now is also a possibility to anticipate holidays. With the exception from the religious ones, we have the federal, state, or city levels. It can be anticipated and used to compensate the balance of hours bank agreements. So it's basically like a credit in working hours balance for employees. And by last, in this provisional measure, we have the postponing of the Fgts deposits. It basically is that if the Fgts, which is the monthly 8% deposit made in employees' bank accounts, may be suspended. It is a choice for the company to suspend it from March to May 2020, and to pay this in the future in up to 6 installments, okay, without the need to pay any interest, no penalties, or any charges at all. So these are the main, okay, provisional measures. Again, it's a very high level overview on the main alternatives brought by the government, so that companies can use these to face this crisis period that was brought by coronavirus, okay?
Thank you, Bruno. This is a fantastic overview in relation to labor initiatives in Brazil. Thank you so much. And I'm going to return and ask more questions to you and also Romero. But now, I'd like to turn this over to Manuel, because I've heard he's one of the co-authors of a study about how to adapt the tax function due to disruptions posed by COVID-19. I'd like, Manuel, could you please explain this approach? What do you suggest in this approach, please?
Sure. Thank you very much. Good morning, everybody. Hope you're safe. Thank you, Anna, for extending the comments. You are correct. The TRS group, Tax Reporting and Strategy, we have carried out a number of discussions to try and understand how would this whole crisis behave. I know that's very difficult type of exercise, but the whole idea is to try and understand if there would be waves through which we could navigate, take the proper actions, at the right measures, and keep the company functional. In this study, we identified that this crisis has basically three, as many other crises, they have basically three moments. The first one is where we need to defend. So the company takes defending measures to keep running, to keep a minimum stability. They are usually supported by business continuity plans. The second one, when the company adapts, and at that moment in time, they have better processes in place. They have reshaped a number of their internal functions and all these things, especially in the tax area where compliance activities, they tend to be numerous, time-consuming, really dependent on systems, on flow of data. And then we have a final moment where we understand what the economy is going to look like after the whole crisis, what the big movements are going to be made. and we understand if there's going to be a new normal, which is likely to happen very intensively this time. So in these three big waves, defense, adaptation, and then the reaction at a point in time when we are entering the new normal, tax function will be able to provide the business and to behave in a way that will more collaboratively help companies move out of the difficulties that they're facing. If we look at the first stage, we're talking about defense. We need to keep the company compliant. Keeping the company compliant, we're in a situation where all your resources are working from home, where you do not have 100% control of the systems environment that we'll be dealing with. You have, of course, the company will have sustainability plans, business continuity plans, all these things duly supported by IT strategies, but think that people are working from their home, where their own Wi-Fi capabilities, sharing these home capabilities with infants, with other family members, having to deal with a whole different type of routine. Where you are at home, you need to share your time with the kids, with the internal affairs of your own home. So it's very, very complicated. You need to understand what it's going to be like for a tax function, and then start thinking, well, this is going to be harder. It's going to be harder. Release is a good time. This may sound kind of paradox, but this and it means a lot. Small automation. This means a lot for CFOs making the right investments for people to eliminate those 10, 15, 20 hours in routinary activities that they have in the day-to-day jobs, change that for RPAs or for the use of advanced ETL mechanisms, spend less time in doing manual reconciliation of data, in doing manual transportation of data from one system to the other, a lot less effort in transforming this data for the next step in the whole process to be able to move forward with whatever necessary actions. So it's a whole different thing. Upskilling in the first moment is important. You're going to use that, and that creates a link for the second stage when you are adapting. You're going to use upskilling to do more with less time. So we are going to try to understand how to do the same types of jobs, spending less hours, because most of the hours that were dedicated to those reconciliations, fine-tunings, confirmation reviews is now going to be spent in helping the business keep up with the pace. So doing more with less necessarily means that you have a lot of automation going on, and you are now tapping into new organizational models for your function. You're going to be discussing with your internal personnel what is really the core activities that they need to carry out. Invest in those core activities and start trying certain organizational models, such as the managed services, where you have an external function carrying out a day-to-day activities in a delivery model that is a lot more advanced than the pure outsourcing. These will prepare your function for what's going to be the new normal, or the reaction phase, the third one, where of course opportunity is going to be coming up.
Thank you, Manuel. I feel there is a light. Sorry, Manuel. I think it cuts my connection. Would you like to continue? I
was just saying that that's going to be the new normal stage where companies are going to have their tax functions a lot more agile, a lot more prepared to respond rapidly to opportunities. That's what they call in this business the fit for growth. And well, there are the places where the tax functions are going to really help business keep going on, keep growing, and seize the opportunities after the crisis as they arise. Back to you, Anna. Thank you.
This is really, really good news because I'm really worried, Manuel, about the compliance. How can I keep my tax obligations? Can you give me some thoughts about this? Because I'm really worried about this.
Sure, that's where business continuity plans are going to be put to the test in companies. They're going to see companies leaving their reality check on their business continuity plans. And as it relates to tax functions, that's the full package. We need a lot of data processing. We need a lot of data transformation. We need all the systems to be in good shape for the tax function to run normally. We need a proper analysis environment where analytics are carried out. We need to rely a lot on company systems and data for whatever we need to do in the internal function as compliance is concerned. And while doing that, working from home is certainly something that's a big challenge, especially for a very, very long period, right? So business continuity plans, they are prepared for companies to be prompt for reaction within weeks. Now we're talking about operational models where we're going to be out of our ordinary working space for like months. So that's a whole different thing. Keep compliance running or keep the company compliant, therefore, is key. So in this time zone where we need to do a few adaptations, where we need to be creative to keep compliance running, even if we have problems in sourcing data, in transforming data, means that do the best you can at the first moment, but keep track of the things that you believe will need to be looked at in a more deeper detail afterwards. If you really lack resources, that's the right time to reach out to your trusted advisors, see for some loan of a staff, for some co-sourcing, for some types of temporary arrangements to keep compliant at a minimum in terms of quality and timeliness. Now, it is the right moment for the company to think about upskilling, because these moments are going to be announcing where you need the most to increase your personnel capabilities. That's going to be, very good living proof of where your real pain points are. And the three pillars, which are, you need to have a communication plan to seize opportunities quickly, to spread the news within the company quickly as far as tax information are concerned. You need to keep operations running, and therefore you need to have the proper connections with your business areas. How can tax help in being creative with regards to new business models and to adapting to these difficulties in terms of business and whatever tax arrangements and implications within those. And back to the compliance, the plan is upskill people, do more with less, be prepared for the fine-tunings as your internal functions get back to a normality afterwards. So those would be my overall guidances here. Back to you, Anna. Thank you.
I understood, Manuel. This is very helpful. Thank you so much. Another point that I'd like to touch on is the cash constraints my company is facing since these crazy days started. Romero, can the tax functions secure tax efficiency and bring benefits to my company? Can you help me on this?
Absolutely. At this time, cash is king, and taxes are cash, at least, when not a P&L hit. As I've mentioned earlier, just before I go through what some of the potential opportunities might be, but again, just to make sure it's clear, the measures proposed by the Brazilian, adopted by the Brazilian government were not enough to avoid taxes in Brazil still being a cash outlay. Meaning not all federal, state, and local taxes were covered. The most of them were not covered by the deferrals. So you still can have a business that is directly and significantly impacted by the crisis, that's still having to pay, for instance, income withholding taxes on payroll, that's still having to pay, IPI, the industrial products tax, or a state value-added tax, ICMS. So we have this whole host of different types of taxes that are still hitting on the one hand. On the other hand, this is a time where, for instance, there are numerous, say, input tax credits for these different types of levies that historically are accumulated or not liquid. So companies cannot really get a refund processed in normal times, let alone now. So there are significant movements in the area of tax policy to change that because of the crisis, but it's very hard to count on any of those changes actually happening anytime near, while the tax function is actually sitting on top of this process that can, at least if not stop, that can help in either raising cash or monetizing credits and so forth. So yeah, there are a number of different things that in this emergency moment, the tax function can do. Basically, there's a laundry list of items that every responsible tax function would be aware of, and that in normal times, perhaps you wouldn't necessarily have to focus on a lot of these things. But given the unusual, unprecedented time we're going through, I think it is worthwhile to revisit, for instance, the risk profile of the company, and whether, for example, every and all opportunities for the last 5 years were really, used. So, for instance, we have a whole host of judicial litigation cases that not every taxpayer has initiated, questioning how the tax base for the transactional taxes are computed. We do have this cascading tax on tax effect for most of our levies, for instance, applies on gross sales, but is gross sales inclusive of state VAT or not? The Supreme Court has ruled already that it's not. If you're in the services sector, is the PIS/COFINS applying on top of a municipal city tax, for example, ISS? So there's a whole host of issues like this. Again, this is still Brazil. It's very prolific in tax litigation and in tax uncertainty. The point is that to the extent that you revisit that laundry list and you take advantage of all the potential input tax credits that you can compute, that you ensure that your tax base on your turnover is the least that it should be given jurisprudence. If you look at transfer pricing, Brazil does have the system that has no match, that has basically fixed, statutorily fixed profit margins on transactional methods. The taxpayers actually have the choice of methods. So there's no best method rule. So can you look back in your 5 years, and if you had any transfer pricing adjustments, could you switch methods? As complicated and labor intensive as that might be, if you switch methods, could you recover the tax that you had to pay on those adjustments? So can you get a refund? So that's also possible. Interest on equity. We do have this notional interest calculated based on equity. Have you taken advantage of that in the last 5 years? If you have not, we do have a position we can take where you can actually compute retroactively this interest on equity deduction. So there's a whole host of items that probably your local tax team would be aware of. And if they have not used it over the last 5 years, now is definitely the time to ensure that everything is used. A lot of companies have not actually maximized all the opportunities to quantify these potential tax credits, exactly because in normal times, you basically compute a credit and you wouldn't get a refund. You basically would have something hanging in your balance sheet. Maybe you wouldn't even recognize it, if the liquidity is uncertain. But what's going on in the local market here also, Anna, is that, investment funds that are devoted to distressed assets, they develop this whole new business where they are acquiring economic rights and beneficial ownerships over these tax credits. So could you then, compute, go back in your 5 years and compute everything that you could have done, and then again, maximize the amount of potential credits that you could claim, and then engage in some form of securitization or monetization strategy with the support of a bank or financial institution? Yes, you could. So yeah, so the tax function would actually have this opportunity to help middle of this crisis, not only in maximizing potential credits and minimizing current levies, but also in just raising cash in structured actions with banks and financial institutions.
Great, Romero. Now I'm getting more excited because as an exporter, as you know, I have a lot of tax credits. And I was worried because we know how hard is the process to recover this in Brazil. So are you saying I have alternatives to monetize these credits? Is what you are saying?
You absolutely do, Ana. And historically, this is not the case. Historically, there was only a market here with very, very high discount levels for some very limited types of credits arising from specific judicial claims, where just a handful of funds would basically purchase them at a, say, 80, 90% discount, and then collect from the government through a judicial proceeding. What's been going on now is that because interest rates have gone down before the crisis, but even now they're lower than they were a few years ago here in Brazil, that banks, very reputable and large banks and financial institutions, are diversifying. So in diversifying, they have structured these funds where they actually can do both. They can either, as I said, acquire through a true sale economic rights over these accumulated credits, or they can also enter into some form of lending arrangement, having the credits as a form of guarantee. So both types of mechanisms can be used as treasury tools. So basically, tax now, more than ever, is a very, very key partner of your treasury function. You as a CFO should know that if ever before, now is the time where tax and treasury should go hand in hand and explore all these opportunities realistically. The fact that you are an exporter might mean that even with the downturn of the economy as a whole, it might mean that your net present value, that your actual economic value for the credits you have in your balance sheet is much lower than what they show as their face value. So given that the current market pricing for those credits might be appropriate, given that now there's a competition, it's not just a handful of funds, but there's more of them. So putting together the equivalent of an M&A type process where we can actually get multiple parties interested that would bid against one another so that the discounts would be reduced can be an effective way to raise cash.
Understood. I understood. Thank you, Romero. And Bruno, still talking about cash, from a labor perspective, what can you advise my company to do from a labor perspective?
So, Anna, from a labor's perspective, thinking about cash specifically, one of the most effective alternatives for companies now is to check for potential opportunities for recovering Social Security credits. So I briefly mentioned here the most important ones, the hot topics in Brazil, and the ones that do not require any discussion on courts. They are doing these recovery through administrative processes by using government tools such as social. Okay, I think the most important opportunity, the one that represents one of the most advantages in terms of recovering credits, is the one about the recalculation of the Social Security basis, considering some law guidance on certain benefits. So basically, employees that participated on a few costs, okay, like discounts on transportation, meal and grocery tickets, health and dental assistance, private pension plans, group life insurance. So companies can recalculate their payroll the past 5 years and check the credit by the deduction of those discounts, which is really depending on how many employees and how many costs they participate on. It's a good cash intake. Okay, so another opportunity, which is also good, refers to labor claims. So it's basically recovering Social Security contributions paid on labor claims. Okay, there's a few rules like the contributions are due from the month he works, and everything after 5 years, it was paid without a reason. So you can recover credits also on labor claims. A recent one, but also very solid and safe opportunity, it refers to the limit of 20 minimum salaries it's a cap for this S system that I mentioned before, the contributions for these third parties, okay, for other entities, normally represents 5.8% of payroll costs. So what we have here is to recalculate what you paid before without a limit, now setting this new limit of 20 times the highest minimum salary, which we can do for each employee. So considering each employee payment, we establish this cap and recalculate the entire payroll, okay? This is also what companies can do to recover some money and have credits. We also have the overhaul. It's previous to the COVID, we had the overhaul of labor laws, which you may know as the labor reform. But the labor reform also brought good alternatives for companies now to check on how to minimize or to receive a few relief in terms of cash. So basically what we're talking here is to companies to analyze the payments they make for employees based on allowances, bonuses, rewards, profit sharing programs, travel costs, expenses, and see, depending on how they do it, they may have those payments exempted from the payroll taxes, which is also incredible, okay? We have also another opportunity which refers to the recalculation of the accident prevent factor, okay? Also decreasing the rate that's currently paid by the company today. When I talked briefly of the labor reform, there's another thing which is a new possibility of changing. When you have lots of labor claims, you can change the court deposits or the appeal deposits for bank guarantee letters, which would also save money from the company. So I'm just giving you a very high overview because all of those I've mentioned are solid, have solid structures and are very reliable opportunities. There is also a possibility for companies to raise credit by discussion in courts for other things, okay? But they would have to consult their legal advisors, check on the chances of winning or not, and to see if it's really worth for them. But those ones I've mentioned, they're really safe, and it's a quick and efficient way to receive this credit without the need for any judicial discussion. So this is very positive, okay? So yes, besides the provisional measures, so the released by the government, the alternatives I mentioned before, we also have these. So these actions the company can proactively take to check on potential Social Security credits. Okay, so back to you, Anna.
I understood, Bruno. I understood, and very helpful. I can understand that there is money on the table. And I'd like to ask Romero, can those credits, Romero, the ones that Bruno just mentioned, can be monetized?
Yes, they can. And also to emphasize one of the points that Bruno has mentioned, both in the labor and Social Security area, as well as in respect to corporate income taxes, transactional taxes, and the whole Brazilian tax system, a lot of the positions that can be taken administratively. But a lot of the very important and very solid positions that a company can take would be taken judicially. We do have a partnering law firm in Brazil that we correspond with. And we also have, again, a network of trusted legal advisors that we can introduce and bring forth to ensure that all of these opportunities, those that rely on just administrative proceedings, as well as those that would require judicial proceedings, that all of them are quantified and identified with our support. To the extent we do that, again, these funds that I was referring to, they did start specializing in legal claims. So at the origin, they were devoted to monetizing litigation claims. And just later on, and as the market grew, they actually diversifies into, let's say, less distressed type assets. And then in these less distressed types of assets, you do have this whole category of different types of credits for all of the different taxes that we can identify and all of the different entitlements that we could reduce. So yes, absolutely. All of the different topics referred by Bruno can be in scope for our identification of opportunities and our quantification of credits and our mediation in the process of actually getting these credits monetized.
Thank you, Romero. Thank you. But, you know, I am in doubt because, as you know, I'm worried about there is cash on the table, but a lot of jobs to take this. And I need people. And I'd like to turn into Manuel. Manuel, my workforce, I think it's not, how can I say, digitally prepared and not enough compromised. What do you recommend in this situation? Because I need to operate my tax function during this new normal, and I need a workforce engaged and prepared, qualified. What do you recommend, Manuel, to me?
This is absolutely right, Anna. Your view is perfect. We need to do more with less. We need our personnel to be able to expand their ability to fulfill their functions, to fulfill their activities with less efforts. And the response to that is upskilling. They need to upskill in their technological capabilities, in the sense that they will need to understand how to take parts of those processes which were manually carried out and convert those into automated activities by the use of RPA or robotics process automation tools and techniques. They will need to spend less time in extracting data and treating that data. They will need to use technological resources to more automatically do that. It is really common in Brazil that you have an ERP with a bolt-on tax solution and those things run integrated, but with a few gaps here and there. These gaps are usually filled up with manual work where they extract specific tables and reports and treat those data, upload it back to their tax bolt-ons for the generation of tax obligation reports and other things. So there's a number of areas where you still have manual activities, where you have activities that if they're not manual, they can be a lot reduced by the use of technology. So the response to that type of situation that you're just mentioning, how can I do more with less, is upskilling in technologies. And by doing that, you're going to naturally move your thoughts to your organizational structure. Well, now that I have robots and ETL, advanced ETL tools doing stuff that usually there were people carrying out, what do I do with that people? Well, they will be able to be involved in analysis, but in a very more advanced way. So in your upskilling program, consider also training on business intelligence tools, those tools that you use for analytics. There's a number of those, not propaganda, but a number of those around Click, Tableau, Power BI, SAS, a number of these tools that you use for analytics. And that's, again, another area where we need to put investment on. Train your people to do more analytics, to be more expert on that analytics. And those rewards relative to this type of investment, they will come really fast.
Got it. I got it. Thank you, Manuel. Another aspect, Romero, I'd like your help, because if my company really needs cash in Brazil, how can my US shareholders help me? Can you better explain which structures I have to bring money to Brazil, and especially the exchange variation rate? How do you feel nowadays? Another aspect, could you also tell me about repatriation alternatives or issues? Please take in consideration that my company imports services and technology from the headquarters from US. Romero?
Thanks, Ana. Yeah, this is a very typical situation your company is in. Basically, what has happened with the real this year, and which might get worse in the coming months or in the coming weeks, is a devaluation, a very significant devaluation. With that, companies that had their equity and their debt funding are now faced with the choice of whether to compute the foreign exchange loss on the intercompany loans that they've had on an accrual basis or on a cash basis, and which is already an important item. But if the company needs cash, what the company needs to be aware of is that by bringing that cash in as a loan, you might be looking at not further foreign exchange losses, or not as much, as a potential rebound, which could trigger a foreign exchange gain, which would be subject not only to income taxation, but also to revenue type taxation. So it is indeed a tricky moment to be in, given the volatility of the foreign exchange rate right now. And what we would normally do is, again, first of all, look at your payables, look at what's on your balance sheet right now. So can we deal with those payables? And perhaps take advantage of the fact that in real terms, those payables are maximized. Can we convert those payables into capital? Can we write those payables off into a reserve without triggering a forgiveness of indebtedness? Yes, all of those things are possible. So maybe basically the restructuring of the existing balance sheet, the cleaning up of the existing balance sheet, considering not only the current foreign exchange rate, but what's there in terms of payables is important. If we think about bringing money in, it might be advantageous to bringing in as equity at this moment, given that you're going to get the most bang for your buck, if you will, in real terms, and not have the risk of the foreign exchange gain in the coming weeks. Whereas if you do bring in as equity and the economy rebounds, you can have the choice of either keeping it there and benefiting from interest on equity, which is a very interesting mechanism we have, or whether to then refinance at a higher base and without the foreign exchange gain. So all that is at play and needs to be modeled out now. And at the same time, as you've mentioned, given that you have these transactional flows, you have technology coming in, services coming in, goods coming in, and Brazil has not, again, deferred payments of withholding taxes on cross-border payment, transactional taxes on royalties and services, customs duties on goods. And I think it is definitely worthwhile to revisit those flows and to reconsider whether to keep them priced as separate transactions or whether to restructure them in a bundle, whereas Brazil, for instance, could get into a cost-sharing type of arrangement with a buy-in, and then perhaps avoid all of those different types of cross-border levies that would otherwise be triggered. So back to you, Ana.
That's good. Thank you. I understood. I'd like to come back to Manuel because he mentioned about the digital upskilling of my workforce. But Manuel, is there any other alternative? I've heard in your study about management service. Could you please better explain what does it means?
Sure. This is absolutely right, Ana. Technology is one of the fronts, one of the reaction fronts that you can explore. The other one is look back to your organizational structure in the tax function and understand that in the new normal, you're going to have to be leaner, you're going to have to be more efficient, you're going to have to be more dedicated to strategic activities. So it is a given that the companies will expect you to be in your top of your productivity in the tax function, and therefore will claim for competitiveness, suggestions that will help in competitiveness coming from the tax function. For you to be able to do that, technology is one of the potential areas. The other one is organizational, how you structure your function. And this is where the managed services model links to. I'll go back 4 years ago when we have purchased GE internal tax function, right? So we have at that point in time made a negotiation where we have acquired their internal personnel, and we still kept operating with GE, but now with their internal function run by PwC. The managed services is a fusion of the best of these two worlds, where you have a very, very skilled functional people, very, very skilled functional personnel, linking with our technology, with our consulting, with our multidisciplinary competences, and putting all these talent together to serve companies. So the whole idea is, well, think no more about a tax function run by your internal personnel. I have very much functional skilled people here. I have technology. I have insights. I have the ability to understand business with my functional personnel, as well as to link these with consulting capabilities. And this is what forms a managed tax function. So you will be able to dedicate your tax personnel solely and absolutely to strategy and rely on PwC to carry out everything else relative to your tax function. So that's a real, I would say, a end-to-end type of approach for the tax function.
Okay, Manuel, I understood. Bruno, you discussed about the telecommuting that's bringing to the Brazilian government measures. Can you please explain and advise which risks and the main aspects that the company should take care about telecommuting?
Sure. So I think the first thing when we talk about telecommuting is, even if we consider now this flexibility brought by the government, so less bureaucracy for employees to work from home, there are certain cases which company will have to be aware of and take precaution. For example, if you have certain positions of managers or directors, employee directors, which they currently do not have any control of working hours, so there are a few very specific situations which company needs to be aware, or even there may be in the future. We still don't know because it's very preliminary, this new situation, but companies might face in the future some challenges from courts. So employees might file claims, for example, if they felt that company did not provide the necessary working tools for them, or if it was not adequate to work from home, even health, depending on how you work from home. If it's a chair, you don't have the computer, you have costs that company may, depending on what happens. Because it's dependent on the situation. That's why it's hard to tell exactly what will happen now. But what we do advise is to companies to look for those legal advices and go through what their intentions are, if it is to normalize part of their operations. So a few of them will work from a place with all the precautions and health measures, or the ones who will be working from home will have the necessary tools under health and safety conditions, or the company will provide an additional aid for them to buy those tools. It's all need to be discussed. And if there is specific types of employees who are in charge of specific and really relevant demands on the company, their situation maybe should be dealt separate or different from the others. So that's why each situation needs to be discussed individually. But yes, it's good from one point where you can make employees working from home, but it's an alert for companies. So in the future, will this become a labor claim, which I'll have to face and discuss? Yes, there is this possibility too. So yes, you need to look at the labor code, check on all the rules that are there, and cross-check these with the new provisional measure regulations, and make sure, together with your legal advisors, that you are in compliance, or that you have low risks of being challenged. Or even if you have chances of being challenged, you have enough arguments to present defense and to be then safe that you probably have a win cause on court or in administrative authorities discussion. Okay.
Okay, thank you. I understood. Another aspect I'd like to ask Manuel. An alternative to the crisis, my company is analyzing whether to dispose some assets in order to focus in the core business. At the same time, may we find opportunities to acquire more strategic assets in the market. So I think we can have important merger and acquisitions movements. How the tax function can operate in this new normal to support those movements, Manuel?
Absolutely right, Anna. Number of segments are suffering quite a lot. Those that come out of the crisis in a better shape will have very good opportunities. Companies are focusing in their core, therefore disposal of certain assets is a movement. And if we have taken the proper measures at those times when we were defending and adapting by upskilling personnel, by relying on a managed tax function to carry out the job and have our key talents focus on what's strategic for the business, we will certainly be a lot more fit for growth than where we were standing before the crisis came up. How can we support the business in those types of situations? If you have the proper personnel prepared, duly trained, they will certainly be able to come up with the analysis, with the studies, with the projections that you need to make your decision. They will be able to contribute to your thoughts as to new M&A arrangements and disposing of businesses or purchasing other businesses by identifying which is the best model for that acquisition, for that transaction alone, and for the continuation of the business going forward. So rely on your more upskilled personnel, on your key talents, focusing on the core to provide response to your business in terms of competitiveness at that point in time, and not only in terms of productivity. So that's where I believe they're going to be able to help you quite a lot. Push them for relying on more advanced organizational structures or managed tax services. Push them to invest in upskill. Push them to think strategic, and they will be able to respond to you right away after the crisis starts to show it's going to be the new normal for us.
Understood. Excellent. That's good news. After listening to PwC advice, I feel much more confident that the tax function of my company can overcome the situation and build a stronger recovery. In summary, I took some notes and I heard there are labor measures that can help me avoid layoff and keep my employees. There are also other legal measures which gives flexibility to my company's tax obligations. I can identify and recover more credits to help with my cash situation. My company can maximize and monetize those credits. I can reduce costs with further automation. I can enhance my tax function by working with management service. Tax efficient funding and capitalization is also available, and so on. Wow, this is good. I think we have more minutes, and I'm going to stop here my role as a CFO. I will give the opportunity to those experts answer questions from the participants. I'd like to, let me see, I will give the opportunity to John start making the first question. John, do you have any questions for
that was really
PwC consultants?
First, before I ask my question, if you have a question, you have a Q&A tab at the bottom of your screen. So please submit your questions there. Again, you know, I'm a macroeconomist. I'm not so micro. It's interesting to see what's going on at the firm level and what you guys are doing for the tax function. But there, you know, since it is a holistic approach, we have to think about after the fact. In the United States and Brazil, you're having a massive fiscal expansion, and you're getting some of that is in the form of tax breaks. What happens afterward? Are you already getting questions from your clients about what we may face, you know, 6-8 months down the line in terms of, first of all, tax increases, what kind of form they might take? Second, there is still a tax reform in Congress. What are you guys thinking about the tax reform? And what will you be advising your clients in terms of the timing of all this? I would say probably for the next fiscal year, not this one. Thank you.
Thanks for your question, John. This is Romero here. Actually, what the government is doing immediately is to at least track and segregate the fiscal expansion through a specific budget related to COVID-19. So at least there's an effort not to have that expansion be incorporated into the recurring federal budget or state budget. That's part of the move to avoid an expansion of the state overall going forward, and to treat this additional budget as extraordinary. How that's going to be funded is a huge question. And I think not just for Brazil, but for the whole world. Brazil already has a very high level of indebtedness. Brazil already pushed forward an administrative reform that's long overdue to reduce a little bit of the expenditures we have, even though we did have the pension reform, that's not enough. So there's a lot of question as to whether we will indeed be issuing more debt, and that's more likely than raising taxes because we're already overtaxed. But that's also a risk. I'm going to comment that in a little while. But there's an expectation that our level of indebtedness is going to go to about 90% of GDP as a result of what's going on now. It's over 70% now, so it's very significant. And again, given that Brazil's fiscal state is not the healthiest, this is very worrying. At the same time, we did have, as you well mentioned, a number of, let's say, tax reform avenues that were being debated, right? So we had a leading proposal, we had other proposals going alongside, if you will, all of them addressing the consumption taxes that we have, trying to simplify the system for the most part and unify different taxes for the most part. But in the midst of COVID, of course, those, let's say, those debates took the back seat. And what's now, if you will, what's now in the agenda is almost a struggle between the much needed and well thought through relief and stimulus measures that need to be taken. Brazil has not done enough. As I said, there's still a lot of taxes being paid now, more so than in America and in a lot of other countries, even by companies that are hardly hit by the crisis. So that is still in debate. What else will be done? Will we copy the US in one way or the other and have a special rule on losses? Again, it's recommended by the OECD, and Brazil does want to become a member of the OECD, as applied for that in 2017. So we do have the potential of that fiscal expansion going wider, even given that we haven't done all of the relief that needs to be done. And on the other hand, we do have a number of proposals popping up in Congress about tax hikes. So it could be a withholding tax, right, on dividends going out, which would be, of course, negative for foreign direct investments into Brazil, especially given that we don't have enough tax treaties to reduce that burden. At the same time, there's all sorts of very strange if you will, and poorly construed wealth type and property type taxes. So again, it's a moment of a lot of uncertainty. It's no wonder that the foreign exchange is doing what it's doing, and it's not just the political mess that the president is in with Sergio Moro and all of that. It's also because the fiscal balancing of the state is under a real threat, not only because of the need to expand, the deficit given COVID, but also because of the measures that are being considered in the legislature in this moment are not all counter-cyclical. A lot of these measures could contribute to the down cycle if they were to go through. And given the political risk, who knows if a bad measure is going to go through. I'm not betting that they will. I'm betting that, for better or worse, there's enough sense, I think, in a lot of the leadership in the legislature right now, the whip of the House as well, some of the leadership in Senate, I think, would hold back on the more, let's say, negative measures that are starting to pop up. And I do think, though, that there's a decent chance that the debate of the reform, not for a reduction of taxes, as you know, but for simplification, there's a chance that that might be the one stimulus measure that gets passed. Hopefully this year, if not effective this year, but at least at the constitutional level approved this year, which would be a very, very, let's say, good data point for the inflection towards recovery.
Thank you very much. It seems maybe this, one of the few blessings of this situation is that this could finally dislodge the reform and move it forward for sure. So thank you very much.
And this is one of the questions I have, John. Romero, continue with you. What we can expect from tax reform, considering this COVID-19 period? What we can expect the Brazilian tax reform?
Yeah, I think that the main reform, when we discuss Brazilian tax reform, normally people is referring to the different constitutional amendments that have been put forward, again, to introduce a VAT, a value-added tax, and over time replace the existing Byzantine system that we have of different consumption taxes, IPI, PIS, COFINS, ICMS, ISS, and all that. Letter soup. Basically, we do believe that that's going to keep moving. We don't think that's going to go back, as John pointed out. This was already gaining momentum, and the crisis might be what makes it dislodge and move forward. Again, that process is long drawn. The immediate effect is more the expectation, the impact that we will have on future years. So the possibilities that it has to, let's say, to untap investments, foreign direct investments, expansion type level of investments, given that the consumption pricing will be more sensible. We're not going to have as much of a distortion in relative prices as we have today, given the current system. So I think that's going to move forward. We can expect that to move forward. What's happening in parallel, though, is that because of all these crazy proposals that are popping up on wealth and capital and income, I think that what's happening also as a consequence of COVID is there's going to be an acceleration of a much needed debate on income tax reform. So I think that's really happening now. I think that's not going to go back. Brazil has a very regressive system. It's really, it really overtaxes labor and wages and lesser income, and it undertaxes the higher bracket personal income, as well as to a certain extent it undertaxes here capital. There are some relief areas that might be redundant or really not necessary, or not have the necessary resource mobilization effects that one would expect. So I think that we would expect to see a reduction of the corporate tax, perhaps similar to what the US has done, but neutralized, not as a mere relief, but neutralized in a way, but by an increase to withholding taxation. There's a number of proposals along those lines. I myself have been to the Brazilian Federal Senate as an expert witness to testify on those potential reforms. There's a much needed convergence to international rules, as well as cross-border withholding taxation. Brazil overdoes it. So I do think that there's a number of adaptations to the income tax system that were not priorities, but given the debate on stimulus and relief measures, as well as the revenue needs of the union in light of COVID, I think that personal income taxes will be low. And I think that we may end up seeing a revenue raise through the personal income tax in higher income brackets. I think that's a possibility.
That was actually the direction I was going to go in on that. Certainly, it's much easier to put in a real income tax reform in place with low inflation. Inflation is quite important. That's always been the difficulty in Brazil, even with indexation. But I had another question. How about we've seen, like you said, there's some of these ideas that are sort of not so great. And Brazil is one of the few countries in the world that does not tax dividends, which is double taxation. If that actually comes to fruition, you think it'll be maybe neutral in a way, maybe some kind of deduction for dividend payments or something along those lines? That's an extremely important part, and certainly in the United States we still double tax dividends, and that tends to push debt, the incentive to take on debt on the corporate level.
Right. I think that's inevitable, John. Basically, the system that we've had is a system that, in a way, integrated the double tax into a single tax. So basically, back when we restructured the rates in 1995, we had a corporate tax rate that was set at a level that would theoretically pre-tax, dividends paid out. So at that time, the idea was Brazil eliminated a withholding tax and came up with a corporate tax rate, which was not super low. It was aligned with what Brazil thought would be the US rate, was slightly, around the average OECD rate. And in a way, as a stimulus for capital investments. Again, coming out of inflation back in 1995, we did have a lot of indebtedness, even because of the effects of deductibility of interest in foreign exchange and monetary correction from the income tax base. So all of that had been replaced by a system which incentivized capital, but which was justified as an integrated system. What we see in the proposals that popped up was, again, true, as you say, a true double tax. So the current rate would be preserved, and you would create this new withholding tax. That did not get a lot of traction. So there are some, Congress people and some senators who still believe that's the way to go. But the way that I think the majority is likely to form is that Brazil's corporate tax rate is already way above the world average, not even the US, but if we look at the OECD rate right now, it's around the US rate. And Brazil still has its 34% rate for general businesses, and that's even higher for financial institutions, goes beyond 45%. So it's an incredibly high rate. And what the proposals, I think, are likely to do is there would be a reintroduction of the withholding tax, but most likely the withholding tax is not going to kick into, let's say, business groups, for example. So you would have a group relief in a way. Probably it would not be applicable to some of the formats of portfolio investments that we have, which again facilitate reinvestments into the Brazilian economy. But I do think that we will end up with this reduction of the corporate income tax, making it, if you will, beneficial while the reinvestments take place, but with a true, let's say, recoup of the income tax burden via the personal tax. So I don't think that it's going to be, if you will, a real increase in the total burden for a company that pays regular corporate income taxes. But for perhaps small and medium businesses and for some sectors like the services sector, they do take advantage of a much, much lower effective corporate tax rate through alternative minimum taxes, presumed tax regimes, and then they have a free withholding, a tax-free dividend. I think that's going to change so that in the end, the total income tax should be normalized at the individual level at circa 35, 34, 35. So still less than the US, classic double tax system at top bracket rates, and much, much less than what you see in personal income taxes in Europe, for example, whereas we do have universal health care here for better or worse. So it's still going to be a competitive system, I think, but it will be split now. It will be split between a corporate tax and a personal tax, whereas up to today, it's not.
Excellent, Romero. Thank you. Bruno, do we expect from labor perspective any new measures?
So, yeah, it all depends. There is no trend topic being discussed right now, actually, but we think there will be a few regulations of existing provisional measures, because a few of them can be confusing, and there are specific parts and paragraphs of those measures that could have different interpretations. So probably when the problems arise when implementing those measures, the government will have to release a few additional regulations, at least to clarify those points and not let those in the hand of courts, because the fear of investors is what was happening in recent past is the government released a provisional measure. So there's the force of a legislation, okay? But then let's say the Supreme Court starts to put their opinion on that and interpreting. Just to give you an example, we had in the past saying about the individual agreements for the reduction and the suspension, the salaries. The legislation was very clear. The provisional measure was very clear, which case the individual agreement was applicable and which the collective bargaining agreement was applicable. But then there was the minister from the Supreme Court. He just tried to legislate on that. And this caused a few concerns for people here in Brazil and abroad. But we are sure that government is aware of those points, and he is correcting all gaps they have in previous provisional measures. Yes.
Thank you, Bruno. Before I move to John, I'd like to emphasize some initiatives PwC Brazil is doing to help Brazil face COVID pandemic. In order to recognize the amazing work of doctors in São Paulo and in Rio, PwC is pro bono, helping them with their income tax return obligation. Free consultation can be scheduled in PwC site, pwc.com.br site. We have also donated some of our time to govern the São Paulo government and also essential items. Another aspect that I really, it's linked to what we are discussing. PwC is opening for free its digital fitness app that can be downloaded, and companies can help their workforce to upskill digitally. This is a good time for this, and we are happy to contribute. John, I think I finish here, and I'd like to thank you, the speakers, my partners, Bruno. Thank you, the participants, for all your attention, and I hope you have enjoyed as much as I did.
Thank you very much, Anna. Thank you, panelists, as well. Once again, thank you to PwC for today's excellent event, and also for the Brazil Summit of last week. PwC is an especially important partner for the Brazilian American Chamber. Before I close, I wanted to remind attendees that on Tuesday, the 28th of April, we will have an open discussion, a bate-papo, if you will, with Luisa Helena Trajano at 10 a.m. New York and 11 a.m. Brasilia. We hope to see you then. In the meantime, stay healthy and safe. Thank you again.